For a while, I've been working on an AI system that is literally like cheating for market traders. Now, forget everything you've seen about, asking an AI if a currency is bullish or bearish. That's completely useless. I've been working on something different, something that I'm going to show you in this video. I asked myself a simple question. What if I could build a prompt that makes any AI tool analyze the economy through the exact same lens as a central bank, so that we can anticipate the next interest rate moves and communications? So literally in this video, we're going to build a central bank insider that's going to tell you exactly what the central bank is doing right now, but most of all, what it's going to do next, which, if you know a little bit about fundamental analysis, it's a big deal. Now, before you even think about prompting ChatGPT or any other AI tool on fundamentals, you need a critical mental framework to understand how central banks operate. The Federal Reserve, the ECB, the Bank of England, they're not traders. They're not trying to anticipate markets. The giant, slow-moving bureaucracies with a very specific mandate, a legal mandate that they need to obey to.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
For the Federal Reserve, that mandate is to keep price stability, so to keep inflation stable and support the labor market, which, it's pretty much the same for all central banks. So they have to keep inflation around 2%, which, nowadays become 3%, but whatever. And they have to make sure that the labor market function well. Every single thing they do, every rate hike, every cut, every press conference, every messaging, every comment is designed to serve this purpose right here. So if you're analyzing a data release without asking, how does this affect that mandate? How does this affect the central bank's mandate? If you don't do that, you're just wasting time. So keep that in mind. All right, let's build this thing. Now, we're about to turn an AI analyst into a full-fledged voting member, in this case of the Federal Open Market Committee, but any central bank. I'm on Grok right now. You can do this on any AI tool you want. You can do ChatGPT, you can do Google Gemini, you can do whatever you want. But I've tested it quite a bit, and I've seen that Grok and Gemini 2.5 Pro are the best ones that are giving the best output. ChatGPT, for some reason, goes a little bit off track. It doesn't actually follow the instructions pretty well. So I'm using Grok for this example. So the first thing to do is to give the AI the role, the context. You're a senior voting member of the Federal Reserve, but you can use any central bank here, with the analytical rigor of a world-class market trader. I'm giving it that a little bit of extra context here, to tell it what we're gonna use this for. It's not just analysis for the sake of analysis. We're actually using this for the sake of analyzing, a trade, a bias, a fundamental bias, whatever. Your entire framework is governed by the Federal Reserve mandate, the one that I've just talked to you about. So this gives it the context to understand, inflation, labor market, how to read those. And you're an expert at managing market expectations. Your task is to provide a concise 2 to 3 paragraphs monetary policy statement based on the most recent public available economic data that matters for the central bank. Now, this is important because not all data matters for the central bank. So we have to understand and give the AI context to know, okay, I gotta look at what the central banks looks at, okay? I don't have to look at, building permits if that doesn't matter. Stated position. Briefly summarize the sentiment from the latest statement and press conference. Simple, very simple. After declaring the data, deliver your assessment as a single coherent narrative that seamlessly integrates these 3 points. Now this is where it gets really interesting. Primary mandate risk. Identify which half of the dual mandate is under the most pressure and justify the most critical data points you found. Now this is important because the central bank is, as I said, legally bound by this mandate. So they have to understand, okay, inflation is more of a concern or labor market is more of a concern. That decides them whether they have to be hawkish or dovish. Policy bias and narrative alignment. Now state whether this data validates or conflicts with the current forward guidance. So it's going to analyze the data, okay, the recent data, and then it's going to analyze what the central bank said, and it's going to find maybe some, discrepancies, whatever. Conclude with a clear policy bias, hawkish, dovish, or data dependent hold, and justify this lane. Now, third and final point, logical market reaction. This is where we put in the trader stuff. Explain the most likely medium-term reaction for the domestic currency, connecting it directly to your stated policy bias and the resulting shift in market expectations. Now, that's a prompt. We're gonna give it some additional rule. Talk and think in first person as if you are a real member of the central bank. And this is something very important because it's gonna tell the AI to act and think as a central bank member. Okay, so it's gonna try to put itself into the mind of, Jerome Powell, Andrew Bailey, whatever, all the central banks said. And keep the language clear, direct, and conversational. Simple. You hit enter, and the AI is gonna start working on it. About 1 minute and 2 seconds later, this is what we get. Now, this is how AI works. If you feed gold into it, golden prompt like this, you get gold. So let me get into this. Now, this is not a trade signal. We're not looking for an exact trade recommendation here. That's our own task. This is a strategic brief instead, but a brief that goes above and beyond the surface levels. This simulates the thinking of an expert central banker. It has analyzed all that it needed, CPI, inflation, labor market, NFP, everything, and handed on that the most likely policy path going forward. This is exactly what Jerome Powell is thinking. This is exactly what the Federal Committee is thinking. Now, obviously, they're going to have different opinions. The one's more dovish, the one's more hawkish. But this is the finely balanced view, which often the central bank head has, like Jerome Powell. So this output has given us the exact monetary policy context for the Federal Reserve, which, by the way, I can tell you is exactly right. Because if we look at the summary here for what actually is going to mean for the domestic currency, that policy stance that should lead to a modest strengthening in the dollar over the medium term as markets dial back expectation for aggressive cuts in 2026, lifting US yields relative to peers and attracting capital inflow. If we see a less dominance than anticipated, it will reinforce perception of a resilient economy, putting upward pressure on a greenback, the dollar, against currency like the euro and the yen. That's exactly what happened, after the FOMC meeting a week ago. So this is absolute golden. This thing has done what could have taken 6 hours, maybe 8 hours of in-depth research. It has done all that in about 1 minute and 2 seconds. Now, is this all you need for a trade? Absolutely not. No way. But this saves you hours of manual research. The analysis here tells you the narrative behind a central bank, which alone, in and of itself, is not enough to take a trade, but it's essential information for a market trader. The way we operate is that the fundamental context gives us the direction. Tells us what to trade and in which direction to trade it. Then the technicals gives us the timing, tells us when to trade a thing in that direction. 98% of traders, maybe even 95% of traders, get this completely wrong. They fixate just on fundamentals or just on technicals, mostly only fixate on technicals. We don't. We combine the two together, one with the other. There's no trade without technicals and there's no trade without fundamentals. There's a trade when both of these align together. The fundamental narrative gives us directional bias. It tells us in which direction the river is flowing. Are we in a hawkish Fed environment where the dollar should be strong? Are we in a dovish Bank of England environment where the pound should be weak? And even better, we can find two central banks going against one another. This is what we call a monetary policy divergence. If one central bank is hawkish and one is dovish, that's the ideal scenario, okay? One central bank is acting bullish for the currency and the other one is actually acting bearish. That's the ideal scenario, which often creates very smooth market trend. So if this is the level of educational content you've been looking for, do yourself a favor and hit that subscribe button. You'll get more of this content ahead.